So the agenda, set an introduction, a bit about myself, a bit about background, just really set to the experiences that I've had. Setting that macro picture, I think, is so critical and important as an entrepreneur going into any business. As you make a decision saying, look, I want to enter in X, I want to enter in Y, you have to have some sort of belief or thought. Either it's going to be a stable business or a growing business, because ultimately, if you're going to enter a crowded business and it's in a decline, guess what? You have to be the lowest cost provider, and chances are, as a new entrepreneur, you're not going to be. The entrepreneur, specifically in the energy space, I bring a good perspective, given that I've served not only currently Lucky Strike, an oil and gas producer, but also in the lithium space and as well as the green hydrogen space as well. And I think, one message that I wanted to leave everybody with is there is that narrative out there that the energy business is dying. Quite the contrary. The way we did business 5, 10, 20 years ago is dying, if not dead. We have to change, but it's amazing. And we'll speak a little bit, kind of ties into the macro. And then some lessons learned. I've been in business for 20 plus years, had quite a long career with banking and investment banking and other companies as well, entrepreneurial. So just give some lessons and love to answer some questions from your folks as well. So just as my background and introduction on Bachelor's of Commerce from the University of Saskatchewan, a CFA charter holder. I did complete my ICD course, which is a gold standard for public company directors. 21 years experience. I started a career in investment banking in the energy practice, did commercial lending as well, and then ultimately came with the entrepreneurial bug. Came with some friends and started up Lucky Strike about a year and a bit ago, actually, looking at the date, almost a year to the day we signed our deal with our company to acquire some assets. On a personal level, very passionate about public education, not only at a secondary, but also at a post-secondary as well. I think it's a cornerstone and bedrock of society and a strong economy as well. And, on a personal side, you can't be an entrepreneur without taking a gamble. So poker is something that I love and try to play with friends as often as I can. And that was a picture of me at the World Series of Poker a couple of years back before COVID. And I did mention you got a puppy here. So 2 young boys and a little puppy and married. So it's a bit on the background on myself. So I wanted to kind of lead in and just speak to that sort of macro setting and just give a good sort of lay the framework again, sort of the context. I think before you have a conversation about entrepreneurship, you need to understand where it's going and ultimately why into this business. So I've got a few slides that I've taken from various statistical reports, BP and things of the sort. Ultimately, the reality is in today's market, hydrocarbons are still the dominant source of energy. You've got 30+% in oil, take it at coal, take it at natural gas. Renewables are certainly growing, which is absolutely important and critical to our development as a whole society and developing our economy as well. Pulling that through, you can see that green is ultimately everybody who wants a Western type of standard of living, and not just from a consumption perspective, but having those benefits of electricity and the comforts as well. You see that basically EIA is forecasting a substantial increase in non-OECD demand for energy, and that just makes a lot of sense. You've got people and societies, quite frankly, that are just getting electricity and things for the first time, and all those comforts that come along with it. What that does dictate into is, again, is all of the above sort of energy demands. When you look out into this entrepreneurial space, that oil, gas is not in a declining business. At a worst case scenario, it's sort of a flat. The renewable space is material. It's 28+%. And I think that number could be light. As you see costs coming down, you continually see that. And governments have the initiative and those macro tailwinds and regulatory tailwinds to support it. But ultimately, to meet this global demand coming up, you ultimately need that whole scenario where you have to have all sort of energy space. So I think it comes back to is that anybody out there that's thinking energy is going away, it's not going anytime soon. The chain will change, just simply that 2018 to 2050, where you went from 15% renewables up to 28% plus. But ultimately, the rest of the energy global output, production, et cetera, will be relatively flat kind of going forward. Ultimately, as you sort of go forward into Entrepreneurship 101 and have this sort of that traditional taking the dive and sort of a picture and going, and it certainly is. And it's sort of a great experience that doesn't matter whether you're selling popsicles, Porsches, or you're looking to drill oil and gas wells. There's a big opportunity and big risks, and you do have to do a bit of that sort of blind dive. So my experiences ultimately with smaller companies in that entrepreneurial space really extend across 4 companies. Prior to that, working in big banks, set that groundwork and foundation. Very different companies, but very similar experiences. So I'll just speak very quickly on this about the companies. Petri, I joined as a young CFO, TSX Venture listed back before the Great Recession occurred, public company. Tangle Creek was an oil and gas startup funded by ARC Financial, the largest private equity group in Canada funding energy. Pivoted a few years later to Next Hydrogen, as was interim CEO of that company, and that is still an electrolyzer company creating green hydrogen from wind and solar. Ultimately went public back in June this year. And most recently, E3 Metals served as their interim CFO and a director. And in fact, I still serve as a director. A colleague of mine, Ray Chow, took over as CFO in the last little bit. So as I sort of stand back and experience this in the context of the entrepreneurial, not so much in sort of a business plan and focus, is Petrif, we raised the largest amount of capital. We closed a material acquisition when I came in, right at the early gate. And again, learning what it came down to when you entered into that great recession, that was 2007, 2008, and banking stopped, quite frankly. There was just not any commerce to happen, and liquidity. And that's something that goes, whatever the business is, we ran into a liquidity pinch because what you assumed the banks would be there, all of a sudden they were pulling. There's a quote, I think it was Mark Twain, that said, to all my banker friends, a banker will give you an umbrella when the sun's shining and they'll take it away when the clouds come up. And that's a bit sort of harsh, but ultimately when there's a credit crunch, guess what? They go down and they look, and there's a flight to quality as well. Tangle Creek, a similar company, but of course exponentially larger. We raised substantial amount of equity, $250 million plus 100 plus million of debt, did some major acquisitions, grew the company growth. And this is where something that came to that timing, exiting the business at a certain time. Nobody could see oil going from $100 to $20 overnight when the Saudis sort of decided not to support the market. Not having that liquidity again. We had some liquidity on our balance sheet, but from an equity perspective, the challenges of being private and recognizing that you don't have an equity outlet, that selling assets is difficult, and you have to be able to respond very quickly when an opportunity presents itself. Pivoting a few years later to Next Hydrogen as a clean tech. And really that just came down to is getting everything in place and having a clear business plan, understanding what you're doing, working towards it. It didn't necessarily have to work. Lots of ideas and lots of technologies are going to fail. That's just naturally. But there was a very clear purpose and understanding, and 10 years of IP, 10 years of patents, 10 years of hard work to get there. And we caught it very fortunate. We caught that market wave and ultimately raised $50 million as part of an IPO earlier this year to go public there. So a lesson in timing, but also in purpose. We knew who we were. We knew exactly what we were targeting in our market, and they went out and hit that. And currently with E3 Metals, still a public company, as again, I serve on the board, ultimately raising that capital, and I talk about it a little later, but getting that liquidity, going out and raising funds, where a year ago it was very challenging in the space. The market opened up, the leadership and the board decided we're going to take this capital and fully fund some of our projects. So now, if you see the clean tech space has pulled back quite substantially over the last 4 or 5 months, but the companies with strong balance sheets haven't. They haven't fallen as much because we have the capital and the expertise and the opportunity to exploit. So, some common threads about that liquidity I keep coming back to, being well-financed, but also being opportunistic, believing what you can do, understanding your limitations. That's certainly very important. And when there's an opportunity to either monetize or capture some opportunity, you have to be able to move very, very quickly. So come through into my current organization, Lucky Strike. So just as a background, it's a conventional oil and gas producer. We produce about 2,500 BOEs, barrels of oil equivalent a day. It's a small investor group with some friends that started up and had a dream, and guys that worked with and have known for quite a long time. So very simple business philosophy, and we look at it as a commodity business, focus on costs and create long-term value, not just sort of quarter by quarter growth. And having one little core area, we can be sort of the masters of our area. A big fish in a small pond sort of analogy. So we can really understand this area and have some expertise. Persistence, I think, is something when you speak of an entrepreneur is very important. If you have a good idea and it's been challenged and tested, you have to keep going. This opportunity we came by just didn't fall in our laps. It was a 5-6 year opportunity. Continual discussions, working internally, not only with the vendor, but also with ourselves. Can we do it? What's going on? Running the economics. Finally, life and circumstance came together in March 2020. We decided we're going to pursue this. We put together some more formal financing, put in some more formal discussions with the vendor, and it still took 4 or 5 months. Ultimately, we signed our deal in November. I was saying October earlier, we signed our deal late October, early November, and then ultimately with the government closing it, it's our asset, and here we are sort of 9 months later. You can't go, you often hear that in business, timing is everything. And the reason I say almost everything is because you have to come in, you take this opportunity and look at it. So we got super lucky down over here where we started our discussions, oil hit negative, but ultimately then oil stayed flattened. But ultimately everything in our discussions, I had a conversation with somebody that said, did you ever predict that oil would run from negative up to 70? Of course not. And if everybody did, they're lying. But what we did is belief in our conviction. We believed that as an entrepreneur, we could go in and do things a little bit better. We could take the existing assets that the company had, and this is what's called a dollar per BOE metric. So it's a metric of a unit of production, very similar to the cost to manufacture this pen or a computer, cost of manufacturing. We just call it a cost of operation. We were able to cut our costs in half. And it was not just one item, it was a very incremental, slowly looking at the whole value chain. Where can we add value? Where can we cut costs without compromising safety, without compromising environmental concerns as well? So went through that and we were able to get that, drive that. So that's irrespective of price. If you cut your costs and you're focused, you can get it there. The next comes down to our ultimate output, what we sell, our production. When I look at it and see ultimately why now, of all the businesses, that why energy is still very exciting and why I think there's huge opportunities. The clean tech space is, I put it in blowing up in a good sense, because ultimately you're dealing with hydrogen, volatile chemicals like that. But the capital is available. People are looking for those solutions. When I go back to that 28%, we have to find a solution that's outside of conventional. For one, for the environment. We cannot continue to have the carbon intensity for our energy portfolio that we've had in the past, because the environment just can't sustain it. Investors, governments are the same. It is very complementary, I think, the whole energy narrative with the existing infrastructure, the expertise, the men and women that work in the traditional oil field and oil field services is very complementary. Somebody that knows how to make a compressor, guess what? They can build what's called a balance of plant for hydrogen. The secret sauce and how to make your electrolyzer, that's the secret. But ultimately, everything around that, the distribution of hydrocarbons or the distribution of electricity, whether it's wind, solar, hydro, whatever you want to call it, you still need that core lines, you still need pipelines, you still need that whole infrastructure to get energy around. I think there is an opportunity, obviously, as major companies look to divest. You see companies like Shell and BP sort of looking to exit. There's still major opportunities given that hydrocarbons are going to be here for a long time. And the macro tailwinds, I mean, you see it everywhere. We're coming out of COVID, consumption is up, growth is up. Everybody's looking, there's horror stories around the globe about a shortage of energy. That as an entrepreneur, okay, how do we meet that need? And ultimately, I look where the new information and new perspective. When I joined the energy space 20 years ago, it was almost a negative to have youth and have new ideas, because the way we did it is the way we're going to do. And I think that is completely turned on its head. In fact, the leaders in an organization have to be young individuals and professionals that are thinking outside the box. And that's an overused term, but bluntly, we need that. And how are we going to address those concerns? How are we going to get more with less, consume less energy, but still have the same output ultimately with our economy and ultimately with the environmental consequences as well. So it's an opportune time as a young professional to enter into an energy space, whether it's in a large company. And I go back to sort of, I've got 3 slides from 3 investor presentations that want to see is why energy, why now? This is from Next Hydrogen, the company that I served as interim CEO. This is on their website. Look, an $80 billion market. I think they've actually even updated close to $1 trillion. The potential there, you want a piece of that. Moving it over to E3 metals. This is a simple graph on lithium supply and demand. We are at an equilibrium today at very low levels. It's expected to grow. You just saw Hertz announce yesterday or the day before buying 100,000 Tesla vehicles. Well, guess what? Budget's going to do that. You're going to have Alamo. All these guys are going to come in. And when the fleets start to convert to electric vehicles, you can times this by 5, because ultimately that demand is going to grow. And guess what? The Fords and the GMs and the everybody, Toyotas, et cetera, are going to convert all of their manufacturing to meet there. And then ultimately I go back to this, is that all of the above, that energy, there still is a huge need and demand. So I'll summarize a bit of the kind of learnings in the last sort of 20 plus years in the space. Reputation is something that's all you have. And I think these are learnings across all businesses. This is just not energy in your personal professional life. I was telling a story when I joined the bank. They sent us off to Toronto, and literally they gave us this line. And I remember it was a week of training down in our basement and making us sort of do all this analytics and modeling. Assuming everything you do will show up on the front page of the Globe and Mail. And that has served me to my benefit to understand that your reputation is all you have. Don't do something that you can destroy your reputation you took 20 plus years to build, either for simple profit or for vanity. Relationships are key. I have never obtained a job, never obtained a contract from somebody that I didn't know. And it's not the old days where you could walk in and get a job from your buddy. They made that introduction. They made a representation. You've got 1,000 resumes coming into an inbox. How do you differentiate? If it's your friend or colleague or business that comes across and says, we should talk to John, this is the individual. Now, you're in a pool, but ultimately you have that amazing opportunity. I think of the business partners that I'm with, Lucky Strike. It's 11 years in the making. We met as young professionals and we had a dream. And here we are 11 years later, because that trust and respect and admiration for each other as business professionals and personal was there. don't rush. It's always sort of a now looking at my iPhone, you can get whatever you want. You can just sort of demand it. But when the opportunity comes, you have to go with that. Go back to that conviction, move fast. Don't lollygag, whatever you want. Have all the information ready. It might be 5 years, might be 5 months, but when the opportunity comes, you got to strike. So that has your capital in place, have your investors in place, have your opportunity to go and be able to do it, your life in place as well, that you can make that. Education, ultimately, the days of not, the Bill Gates, dropping out of university, these brilliant minds, it might be the one in a billion, he's probably one in a trillion, but ultimately that key education. Educate as much yourself, continually educating. I learned more from my ICD course about governance and about how to run a business than I think I did for my BCom. And that's great. That's learnings and things you have to continue to develop. And the last two I will speak to is liquidity. I brought back to it all the companies, a common thread, whatever business you're doing. If you're selling pens, widgets, coffees, if you don't have liquidity, you're dead. If you have a bad business idea, it's going to die in a few months. I'm just sorry. That's just going to not work. But if you have a great idea and poor liquidity, you're going to fail. And isn't that an awful thing to come out of? If your vendor's not going to pay for 180 days, which is normal because something happened, you got to have the liquidity to ride it out. And the energy space, sort of that full circle, come back to Lucky Strike in our conversation, is it's evolving and you have to evolve with it. But there's an amazing opportunity. And I'll end with, youth, given your expertise, given your ability to think differently and not be sort of pulled back or anchored, if you will, from what we've looked at, what we did 20, 30, 40 years ago, is going to be a very big strength. And I believe companies and everybody's going to look at that as a real opportunity. But ultimately, energy is here to stay. It's very exciting, huge opportunities, and a great business that has served me very well, both as a professional and as an entrepreneur.